The S&P 500 is trading at $7,483.24, essentially flat on the day. But beneath the surface, there's a lot of movement. One stock that's catching attention is SLBT, up a staggering 34.61% today, outperforming its peer group. This move is significant, especially when considering the broader market context. The VIX, a measure of market volatility, is down 2.11% at 15.81, indicating a sense of calm in the markets, which makes SLBT Surge all the more noteworthy. Zooming out, we're in a neutral/mixed signals regime, where the next catalyst is key. The market is watching Fed speakers, CPI data, and earnings revisions closely. This regime suggests indecision, and the correlation between assets is breaking down, making individual analysis more important than macro calls. The yield curve is relatively stable, with the 10-year Treasury yield at 4.485% and the 2-year yield at 3.668%, indicating a modest growth expectation without significant inflation fears. Diving deeper into SLBT, its price of $5.99 represents a significant jump, and its peer group performance today shows it's outperforming most of its counterparts. The key drivers for SLBT include interest rates, earnings, and sector rotation. With the CPI inflation report coming up in about 5 days, the market is bracing for potential impacts on interest rates and, by extension, stocks like SLBT. If the CPI comes in hot, the Fed might stay hawkish, which could lead to a risk-off environment. However, SLBT's current momentum suggests it's benefiting from specific sector rotation and possibly earnings anticipation. Another stock making significant moves is PLBL, up 18.2% today. PLBL's move, like SLBT's, is driven by interest rates, earnings, and sector rotation. The upcoming CPI inflation report is a medium-impact catalyst for PLBL as well, with a hot CPI potentially leading to a risk-off environment. PLBL's performance today outshines many of its peers, indicating strong sector-specific momentum. The cross-asset correlations are also telling. While SLBT surged 34.61%, the VIX fell 2.11%, indicating a divergent move between risk appetite in specific stocks and overall market volatility. This divergence can signal a regime shift within the next 10 to 20 trading sessions. Historically, the relationship between stocks, particularly high-beta names like SLBT, and the VIX can provide insights into market sentiment and potential future moves. Bitcoin, currently at $63,191.98, down 0.63% today, is another asset to consider. Its movement is influenced by Fed policy, dollar strength, institutional adoption, and ETF flows. The upcoming CPI report could impact Bitcoin, marketed as an inflation hedge, though its correlation with inflation varies. The crypto market is in a consolidation phase, with BTC's dominance and the put/call ratio offering insights into investor sentiment. The sector rotation is also noteworthy, with healthcare, XLV, leading the pack, up 2.63% today, followed by biotech, XBI, at 2.5%, and utilities, XLU, at 2.21%. The money is flowing into these sectors, likely due to their defensive nature in uncertain economic environments. The supply chain implications for the featured stocks, such as SLBT, involve understanding their upstream suppliers and downstream customers. For instance, if SLBT benefits from current trends, its suppliers might see increased demand, while its customers might enjoy better pricing or product availability. Before delving into the action plan, it's essential to consider the broader market and economic context. The current neutral regime, mixed signals, and the upcoming CPI report set the stage for potential market movements. Understanding these dynamics is crucial for investors to make informed decisions. The next part of our analysis will explore the top movers, forecast, and provide an action plan tailored to different investor types, ensuring viewers are equipped with the insights needed to navigate these markets effectively. Now let's zoom out to the bigger cross-asset picture and examine how different markets are interacting. The Bitcoin price, currently at $63,191.98, has moved in tandem with the S&P 500, indicating a risk-on sentiment among investors. However, The gold price, up 1.11% to $4,171.60, suggests that some investors are seeking safe haven assets, possibly due to concerns about inflation or geopolitical tensions. The 10-year Treasury yield, steady at 4.485%, implies that the bond market is not yet pricing in significant inflation risks, but the yield curve shape suggests that investors are cautiously optimistic about the economy. The relationship between these assets is critical. When Bitcoin and the S&P 500 move together, it often signals a strong risk appetite among investors. Conversely, when gold rises, it may indicate that investors are becoming more cautious. The current dynamics, with both Bitcoin and gold showing positive movement, suggest a nuanced market environment where investors are balancing risk and caution. The cross-asset correlations data shows that when SLBT, stock, and Matic USD, crypto, move together as they are today, with SLBT up 34.61% and Matic up 2.57%, it has historically preceded a period of increased volatility in the markets. Sector rotation is also a key aspect of the current market environment. Today, the best performing sector is healthcare, with the XLV ETF up 2.63%, followed closely by biotech, with the XBI ETF up 2.5%. This rotation into healthcare and biotech could be driven by investors seeking sectors with strong growth potential and less correlation to broader economic cycles. The worst performing sector is energy, with the XL ETF up only 0.78%, which might be due to the recent news about OPEC Plus agreeing to raise output targets, potentially increasing oil supply and putting downward pressure on oil prices. In terms of supply chain, the move in SLBT, a company involved in science and technology, has implications for both its suppliers and customers. Upstream, companies providing materials or services to SLBT could see increased demand, benefiting from SLBT's growth. Downstream, companies using SLBT's products or services could experience improved efficiency or cost savings, potentially enhancing their own competitive position. For investors, understanding these supply chain dynamics can provide insights into potential future movers in the market. Looking ahead, the forecast for the next 2 to 4 weeks is mixed. There's a 40% chance of a bull scenario where the S&P 500 could reach $7,857 to $8,082, driven by positive earnings surprises and a dovish Fed. A base scenario with a 45% probability suggests the current regime continues, with the S&P 500 ranging between $7,334 to $7,708 as markets digest recent moves and consolidate. The bear scenario, with a 25% chance, could see the S&P 500 drop to $6,735 to $7,034, triggered by a hot inflation print or geopolitical tensions. Key support and resistance level for the S&P 500 are $7,109 and $7,857, respectively. Before we get to the action plan, here are the 3 assets getting the most attention in markets right now. SLBT is up 34.61% to $5.99, driven by its exceptional relative strength and upcoming catalysts. PLBL has risen 18.2% to $10.26, possibly due to sector rotation into its area of focus. GPC is up 12.92% to $132.57, which could be attributed to its earnings performance and sector dynamics. For viewers holding or watching these stocks, it's essential to consider the broader market context and the specific drivers behind each move. For an action plan, aggressive investors with high risk tolerance might consider SLBT as a long position, given its exceptional relative strength and potential for further growth. Moderate investors could look at a diversified ETF like QQQ, which tracks the NASDAQ 100, offering exposure to a broad range of growth and technology stocks. Conservative investors, focused on capital preservation, might prefer a more defensive position, such as a high dividend ETF or a covered call strategy on a stable stock, which can provide income while minimizing downside risk. Tools like TradingView for chart analysis and Simply Wall ST for financial data can be invaluable in making these decisions. In conclusion, navigating the current market requires a deep understanding of cross-asset signals, sector rotation, and the supply chain dynamics of key stocks. By considering these factors and tailoring an investment strategy to individual risk tolerance and goals, investors can better position themselves for the potential scenarios unfolding in the market. For more insights and analysis, consider subscribing to our channel and utilizing tools like Betterment or Wealthfront for portfolio management. This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions.